guys, Mike here. So it looks like semis and NQ and QQQ and Chinese stocks took a beating today, that is for sure. And we'll talk about why that is specifically. Got some more econ data, which of course looks like hot garbage. We'll talk about as well. And then we're going to or talk about a sector that actually was all green today. And definitely watch out for this one when rate cuts come in for sure. And also at the end of this video, I'll leave you with some thoughts I put in our Discord and kind of getting your input on it. It'll trigger a few of you, and some of you will understand and actually agree with, I think, what I have to say. But anyway, we did have some economic data come out, and some of it was good, some of it was bad as usual. And when we look at it here, believe it or not, new family homes, right, single family homes, actually increased when it came to sales and stuff because what's happening? The rates are dropping slightly and people are jumping in, okay? Now, when it comes to manufacturing data, once again, still in recession, no ifs, ands, or buts about that, still in contraction, but it wasn't as bad as they thought. Ended up with the Dallas Fed Manufacturing Index, minus 9.7 versus minus 16 estimated. And of course, I'm not gonna go over all the numbers because they were just bad. That's just the way it is, okay? And this ain't the end all be all, but pretty much all of these look this way. Now, people are trying to figure out, is this bottoming? Is it starting to turn up like this? Starting to, not coming as bad as we thought it was and all this good stuff? Well, when it gets above zero, that's when we'll know that maybe that is the case, okay? Now, this one I want to get your opinion on because this was an interesting chart I saw where it says when you're shopping for hotel rooms, airlines, and cruise lines, the website traffic, as you can see, has fallen off a cliff. Some since December, some since all the way back in July. But I would say this, though. How many of you guys actually shop on an airline site or a cruise line site or anything versus going through Expedia or Trip.com or one of these other sites? That's what I'm curious about because I want to see, is traffic actually falling off? We're just not purchasing stuff, or is it just the traffic to the particular website? Because I've never bought an airline ticket on an airline website. I always go through Expedia, or maybe you can go through your credit card that has the rewards and you purchase on there so you get triple your rewards points stuff. So I'm just curious if that's the case. I mean, obviously, no doubt that, or as many people traveling, I would think not, right? And this kind of goes back to the old phenomenon, which is the old iceberg here of the rate cuts you see, or as far as the impacts right here, and then below the surface, which is where most of the iceberg is, that's the rate impacts we haven't seen, okay? And maybe you're starting to see them. So let me know in the comments what you think about that, because that was a big drop off. Now, looking at the indexes, we're going to keep this very simple, okay? Still consolidating. Talked about this on Sunday's video. We filled that gap. There's all-time highs, about 0.68% away, I believe. And so the Dow, believe it or not, actually set an intraday new all-time high for like 3 seconds, and then it sold down. But the S&P has not yet, obviously. Again, we break the trend line, we go down probably this gap right here, and a lot of this depends on what? NVDA earnings, okay? Because if NVIDIA sells off, most of the AI stocks are going to sell off. Q's sold down today over 1%. It is into what you would consider an area of interest support, so it could get a bounce right there to fill that gap. Or if we break that line, coming back down to fill this gap below we talked about on Sunday's video, and then maybe moving up from there. You come on IWM, right here, that daily fair value gap we talked about, filled it to the penny, got a little bit above it. But as soon as we got that daily fair value gap, the imbalance taken care of, we sold off the rest of the day, right? And so, again, spiked up in the morning time, got above it, tried to come back a couple times, didn't happen. And so, when we look at this, there are lines of resistance. See where it got rejected right there? That is a line of resistance. And so, no surprise. So, again, fill the daily gap to the T, of course. But now that liquidity is taken right there, when we start to scroll back out, you can see all those white lines right there, 224.08, 226.65. All of that is resistance. So let's see if maybe we come back down before going back up, form maybe a W formation, if that would be the case, be a much healthier move. But again, we'll see what happens here, because again, IW's had a big move for the last 3 trading sessions. So don't be surprised a bit on that if you do get some pullback on this one, just like you saw in the Qs, right? Now, NVIDIA, again, what's it doing? Just consolidating, staying above that the descending trend line right there. And, you come over here and you look at Tesla, right? Tesla actually had a much worse day today. Actually, ended up rejecting, coming down, came back into that shaded area, which is held as support again, started sucking back up, and now it's just wedging between the descending trend line and the ascending trend line. No surprise, when we talk about these, you have to have positive bullish flow for these to move, or some crazy news like earnings. And of course, what do you see the top three bearish flows are? NVDA, PDD we're going to talk about, which is hot garbage day, and Tesla, because PDD got crushed. And I said, even before, 30 minutes before they opened the bell, I said, I wonder if they're going to allow NVIDIA and Tesla to get above these levels right here. We had talked about these call walls, right? NVIDIA is still sitting there with that 130 call wall. Will not let it above it, okay? It started off, not really going above it, and then nope. And then you got the 225 call wall now on Tesla. So watch these for sure. And remember, NVIDIA is reporting Wednesday. So we got tomorrow to see how they're going to set this up. But the one sector to watch out for, and believe it or not, it's been left for dead for 2 or 3 years, is the fintech sector, right? They were all green today, even when all the SPY and QQ went red. They stay green all day, okay? And when you look at these real quick, you got SoFi, it's above its 200 moving average. We've been here before, so we'll back off. Again, this gap right here would be my aim if this is going to continue to keep moving higher between 820 and 850 right there. When you look at it in a different way, you can see clearly there is a trend line right here that is trying to break above. It is getting rejected there right now. But that's been going on for about 10 to 11 months right now. So 4 rejections on that. So if it can break above that, yeah, that gap right there is definitely going to be in play. Now you look over here at PayPal. We know what the story is with this one. Finally, it broke above that white line, which was resistance. That was the high for it seemed like forever. Finally got out of this shaded box, filled that gap right there, and now kind of consolidating, maybe even testing the white line right there. And so again, this is above all the moving averages. All the moving averages starting to turn up. Fintech, most of these hadn't even been around long enough to go through rate hiking cycles, and so I can't look back at 08 and others and go, how did it react? What happened? And so we just kind of get to see. This will be our first time. Square, to me, it looks like kind of a mess, but again, it's one of the few that's below its 100, its 200 moving average. You can see Upstart just had a crazy move, over 111% in 3 weeks, which is just insane. But again, moving averages are all turning up. It's above all of them. Again, you're looking around 48.34 for your next level right there. Affirm. This one right here, and of course, getting a pullback on that one, probably nice, but again, it's a high flyer, okay? And then when you look at Affirm right here, you can clearly see setting below is 200 in this channel, moving to the top of this channel where it's been rejected multiple times. So this is going to be the 4th attempt to break out of this. And obviously, this isn't an accidental move, right? This has to do with them saying, "Oh, we're probably going to, cut rates and all this good stuff." And again, this is one of those sectors that's been what? Just left for dead. We've talked about it many times, setting in stage 1 and whatever breakout, and all these failed attempts in the breakouts. And so finally, you're starting to see these move up. Lending Club. This is one that trips me out. I didn't even realize it had been on the market this long. But look at this. This thing was $150 stock. Holy moly, sitting at $12.40 right now. And after 2020, ran up to like 50. And this is another one. Above his moving averages, setting higher lows, higher highs, and stuff like that. And I was looking to see if there was any gaps to be filled coming up. And there is like a very small gap. If it continues moving up right here, always has a break like $12.13 right there. But obviously it has a break 1302 first. But there is like some small gap like right coming up here between 1342 and 1406 to be filled. And so we'll see if Fintech continues to get love, continues to get pushed up and stuff. 2 or maybe 3 of those are very light and low float stocks, right? And so they can be manipulated fast, which is why you're seeing those huge moves, right? Now, SMCI, a lot of people comparing this one to Qualcomm, the dot-com bubble, because it actually looks identical. But what's it doing right now? It's set a low, set a high, and all you're doing if you're in this one is looking for a higher low. Don't want to break down below that low that it set when it came down and was crashing and stuff. And again, there's an imbalance right there to target. You should see a reaction off that to the upsides. We'll see if that sets that higher and low for you. Just pay attention to it. Now, PDD absolutely crushed, down like 32% on earnings. And of course, there's certain things the CEO said you just don't want to hear, right? So I told him in the morning news brief here. You can see right here. We'll highlight a few things he said. While encouraged by the solid progress we made in the past few quarters, We see many challenges ahead. That is not what you want to sit there and hear a chief executive officer say, because you know it's not good. We will invest heavily in the platform's trust and safety, support high quality merchants, blase, and sacrifice basically profits for a short term, because of that right there. And the other one he said was, where's it at? Oh, right here. Looking ahead, revenue growth will inevitably face pressure due to intensified competition and external challenges. That is not good, and that's why this thing sold down. Profitability will also likely be impacted as we continue to invest and all that fun stuff. And so, again, this one right here, if you're in it, obviously it sucked, but it's been a big, huge run up for you. And it is coming into support. So you should start to see, if it's going to bounce, this is where you would definitely see it bouncing for sure. Again, below all the moving averages, but on these ADRs, that don't seem to matter. But it is coming into support. So you may maybe get to see it bounce. If it don't bounce there, it's in a lot more trouble than people will think. Now, when it comes to earnings, the only one I'm worried about, sitting on one tomorrow, if I'm looking at it at all, maybe if you want to go down and look at Nordstrom's there, because you got a lot of retailers this week. And when it comes to economic data, you can clearly see right here, we're going to end up with only consumer confidence coming out around 10 a.m. Richmond Manufacturing Index, which of course I don't expect to be great or anything. We'll see if it's still a contraction. That's really the only thing I'm looking for. And so, we'll see what happens tomorrow on that. Now, I did say I would leave you with this right here. And again, it'll trigger some of you guys, but this is just my true words of what I feel like. And I put this in the Discord when I was hearing people debate about, the policies of presidential candidates and, small government and how government's overspending and stuff. And I just looked at it and I was like, hey man, great debate. I couldn't help but laugh out loud, though, when I read the word smaller government several times. We might as well talk about balancing the federal budget and eliminating the Fed while we are at it. LOL. You want to talk about a surefire way to see your retirement accounts go to zero? Try taking $2 trillion out of the economy. That means balancing the budget and getting rid of the agency that bails everyone out when the crap hits the fan. As I have showed many times, the U.S. bond market and stock market cannot function properly without these two entities anymore. And don't get me wrong, I don't like big government. I think the Fed is ridiculous, but there's nothing I can do about it, and I understand how important they've become now. Just do research. Free market, or whatever you want to call it, ended back in 2008. The markets will function and take its cues from the Fed and federal government, whether we like it or not. The middle class will continue to be the little dog who runs around the dinner table, begging for scraps and dreaming of the day they can rub elbows with the super wealthy, only to realize when they are old and gray that it was all a pipe dream. There are only 813 billionaires in this country, and only 1.5 million people out of 350 million who are worth at least 10 million. They don't make 10 million, they are worth 10 million. If you make $1 million a year or more, you are in the top 0.1% of income earners in the world. Not America, in the world. No matter who is elected, though, the middle class will continue to turn their heads left and right, wondering where our piece of the pie went when tax cuts and stimulus plans are passed. There are a few things that are certain in America. We will continue to see our health insurance premiums go up year after year, while we subsidize 4 other healthcare plans in the U.S., Medicare, Medicaid, TRICARE, and Obamacare. And for those wondering, congressional members do not receive free healthcare. Instead, they get a gold level Obamacare policy and receive federal subsidies that cover 72% of the cost of the premiums. Congress and staff pay approximately 28% of their annual healthcare premiums through pre-tax payroll deductions. They also have access to free and low-cost care through the Office of the Attending Physician, as well as free medical outpatient care at military facilities in the D.C. area. Come on, they need it, right, guys? Haha, it's supposed to be a joke. The second thing is for certain is that the middle class make up the majority of America and will continue to be divided by these politicians, so we don't band together and actually vote in people who actually look out for the middle class. And you just imagine one day if we woke up, pulled our heads out of our butts, and created a middle class party. If we told these two corporations who are masquerading as political parties that we'll take it from here, LOL. And then, of course, one of my favorite movies is Braveheart and him yelling freedom, and I would have put it in here, but I would have got a copyright infringement for doing that. So I'll leave that with you. Let me know what you think about it. I always love some debate on it or hearing your thoughts on it and stuff. So anyway, put it down in the comments. Please hit the like and subscribe button on the way out as usual. Feel free to sign up for the membership. Appreciate all you guys have done that. Let me know if I can do anything for you, and I will see you guys tomorrow for another fun one.